Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight the Australian dollar swung in and out of gains and losses and now presents itself just underneath the resistance of 70.65 with the cap seen at 71 cents. Yesterday the Australian dollar came under initial pressure after a disappointing PMI data out of China. The data from China showed that the business activity in the manufacturing sector expanded at a very soft pace, with the Cajun manufacturing PMI coming in at 50.2 in April and falling short of the market expectations of 51.0. Also, the MBS manufacturing PMI edged down to 50.1 in the same period from 50.5, with a forecast of 50.7. Now, as the market prepares for the US Fed interest rate decision, trading from a short position should keep stop losses in accordance to your risk management. I do suggest, though, as long as we don't break above 71 cents, that the market overall is bearish and therefore should hold towards the region, as I believe, of 70.10 with 69.40.60, the yearly call. What did help the rally, though, but not quite breaking the midway point of the RSI, was this hammer. More to the fact is it could be close to a dragonfly, but nevertheless, either way, the market was bullish from that candlestick. So let's keep an eye and see if the market does shy away from that resistance seen around 70.65 to 71 cents. As the US dollar weakened overnight, it lost its bullish streak after striking a low of 97.14. The US dollar currency is now down 0.4% on the day, and its biggest decline in more than 3 weeks. Now, as I mentioned, the Federal Reserve has opened their 2-day meeting where they are widely expected to leave rates unchanged when they announce their policy decision at 2 p.m. on Wednesday, or Thursday, Sydney time at 4 a.m. The Fed Chairman Jerome Powell will speak at a press conference 30 minutes later. At its last meeting, the Fed indicated that they would continue to keep rates on hold for the rest of this year, that is, amid expectations for a slower pace of economic growth. Also overnight, President Trump hit the tweets and come out and said that he's calling for an interest rate cut. In a pair of tweets, the president said that the US economy has the potential to go up like a rocket if the Fed would lower interest rates, like 1 point, and resume quantitative easing, a bond buying program launched by the Fed in 2008 in the wake of the financial crisis to stop the collapse of the housing market and increase the supply of money in the economy. That's exactly what Trump wants to do, just to push the stock market up and make his view for his next election, which is coming up soon, to look favourable. But as I mentioned, the market will be closely monitoring if the central bank does change its stances slightly or keep very much on the tone of a dovish. There is some people out there saying that they may go tomorrow. So if you are trading, keep your stop losses very tight when it comes to the euro, because now that we have broken above the region of 111.85, the next target is at 112.55.60. As long as we don't break above there, I'm quite comfortable to my call. But we are getting very close to a very significant level, as I mentioned, from the technicals. I do expect, though, the dollar will strengthen and therefore should see a rejection around that 112.55.65 and look back down towards the 111.75 and then down to 111.45. Dollar yen slipped further, and as I mentioned about this engulfing pattern in my report, is the fact is dollar yen is very much on track to target this level of 110.70.80. Any resistance for the challenge, that is, would see around 111.85 and a cap above 112.20 to 45. This descending triangle, keeping very much in a bearish pattern, has now turned around overnight and crushed the level of 129.70.85 to now negate the level. At the present, I am neutral. I don't have a view on the pound since taking out that level, and therefore I'd rather sit back for the moment and see how it plays in this pattern that now has taken out and reversed the bearishness to the recent sterling outlook. Gold still remaining vulnerable, but still hasn't taken that level of 1,288. We'll still need to see that break to get the move up towards 1,300 or higher. While we remain beneath this level, it does give some concern. So the fact is that we could eventually drop back towards the low 70s. But technically, I still am in favour of a bullish call for gold at present. Rounding up with oil, well, the market took a stab at the top side of this support line, which is now resistance, and coming in at $64.6585. It is assessed that further weakness may come into play, and therefore could look towards the region of 61 or down to $60 a barrel before any turnaround. Well, that wraps up for today. Thank you very much for joining me. And just like to make one note again, is that the FOMC rate decision is tomorrow on Thursday at 4 a.m. for those that are interested. But for now, I hope you enjoy the rest of the day. Look out for my report. That will be released very soon.